Most people are running a race they can never win. They spend 40 years trading their finite hours for a paycheck that barely covers their monthly costs. This is linear income, and it is the most dangerous financial position you can be in. If you stop working, the money stops flowing. But there is a small group of people, the asset architects, who play a different game entirely. They don't work for money. They work to build systems that work for them. They understand that a single hour spent building an asset is worth 1,000 hours spent performing a task. What if you could build something once and it paid you every single month for the rest of your life? What if your wealth wasn't tied to your presence, but to your creation? The goal is not more money. The goal is the freedom to live life on your own terms, powered by assets that never sleep. The forever philosophy. In this book, we aren't talking about get-rich-quick schemes or temporary side hustles. We are talking about durability. We are going to explore how to identify, build, and scale assets that are designed to withstand market shifts, technological disruptions, and the passage of time. Whether it is digital real estate, intellectual property, or automated cash flow systems, the blueprint remains the same. Build once, earn forever. You are about to transition from a consumer to a producer, and from a worker to an owner. The transition isn't easy, and it won't happen overnight. It requires a fundamental shift in how you view your time and your energy. But once that first dollar of truly passive income hits your account, money earned while you were sleeping, traveling, or spending time with family, you will never want to work for a linear hourly wage again. Welcome to the world of infinite returns. Let's build your engine. Chapter 1. The 3 Pillars of Forever Assets. To build wealth that lasts a lifetime, you must stop looking at how much a job pays and start looking at the structure of the income. Not all income is created equal. Some dollars are heavy. They require your constant physical presence and emotional energy. Other dollars are light. They float into your bank account regardless of what you did that day. The difference lies in the pillars of forever assets. Before you invest a single cent or a single hour into a project, you must put it through this 3-part filter. If an asset lacks one of these pillars, it isn't a forever asset. It's just another job in disguise. Wealth is the ability to fully experience life. Assets are the engines that provide the fuel. Pillar 1. Massive scalability. The first pillar of a forever asset is its ability to grow without a linear increase in effort. In a traditional job, if you want to double your income, you usually have to double your hours or your stress. That is linear growth, and it has a hard ceiling: the 24 hours in your day. A true asset possesses exponential scalability. This means the cost of serving the 1,000th customer is nearly the same as serving the first. Think of a digital book or a software program. Once the asset is built, selling it to one person takes the same effort as selling it to 10,000. If your asset requires you to be physically present to deliver the value, you haven't built an asset. You've built a cage. Ask yourself, can this reach 1,000,000 people without me having to work 1,000,000 times harder? Pillar 2. Structural durability. The second pillar is durability. We are not interested in fads or trends. We are looking for assets that solve evergreen problems. A forever asset is built on a foundation that doesn't crumble when the economy shifts or a new social media platform emerges. Durability comes from owning the underlying infrastructure. This is why digital real estate, like a website you own, is often superior to social media real estate, like a page you don't own. If your entire income depends on a single algorithm, You are a tenant, not a landlord. To pay you forever, your asset must be resilient. It must provide value that people will still need 5, 10, or 50 years from now. Don't build your house on someone else's rented land. Pillar 3. Low maintenance, the set and forget factor. The final pillar is the most overlooked: low maintenance. Many people buy assets that actually own them. If a rental property requires you to fix a toilet at 3 a.m. every week, it's failing the maintenance test. If a business requires you to manage 20 employees and handle daily drama, it's not a passive asset. It's a high-stakes responsibility. The goal is to move toward high-margin, low-friction systems. This is achieved through two methods: automation, using software to do the work, or delegation, paying others to manage the asset for you. A forever asset is a system that thrives in your absence. If you can't walk away from it for 3 months and return to find it has grown, you haven't finished building it yet. By filtering every opportunity through scalability, durability, and low maintenance, you filter out the noise. You stop chasing quick wins and start building a fortress of wealth that stands the test of time. In the next chapter, we will explore the first major category of these assets: digital real estate. The best time to plant a tree was 20 years ago. The second best time is now. Chapter 1. Summary checklist. Scalability. Does the asset have a zero or low marginal cost of reproduction? Durability. Is the asset built on an evergreen need rather than a temporary trend? Maintenance. Can the asset function and grow without your daily intervention? Understanding these pillars is the foundation. Now let's look at where the most accessible forever assets are being built today: the digital frontier. Chapter 2. Digital real estate, the modern gold mine. In the previous century, the surest path to wealth was through physical land. You bought a plot, built a structure, and collected rent. But in the 21st century, the most valuable land isn't made of dirt. It's made of code, content, and attention. This is digital real estate. Digital real estate is arguably the greatest wealth-building tool in history because of one specific economic principle: zero marginal cost of reproduction. Unlike a physical apartment where you have to build a new room to house a new tenant, once a digital asset is created, it can be replicated and sold 1 billion times for nearly zero extra cost. It is the ultimate expression of the scalability pillar. In the digital age, your leverage comes from code and media. They are the armies of robots working for you while you sleep. The 3 districts of digital land. To build a digital empire, you must understand the 3 main types of property you can develop. Each has a different barrier to entry and a different long-term payoff. 1. Content assets. These are blogs, YouTube channels, and newsletters. You build a destination online that attracts human attention. Once you own that attention, you can monetize it through advertising, sponsorships, or affiliate income. The beauty of a well-written article or a well-produced video is that it remains searchable for years. A video you made 3 years ago can still be renting out space to advertisers today, paying you dividends for work you did once. 2. Software and SaaS. Software as a service, SaaS, is the commercial real estate of the internet. By building a tool that solves a recurring problem, like a project management tool or a simple browser extension, you create recurring revenue. Users pay you monthly to keep access to the solution. While this requires more technical maintenance than a blog, it is incredibly durable because once a user integrates a tool into their life, they rarely leave. 3. Intellectual property, IP. This includes online courses, ebooks, and digital templates. This is the productization of your brain. If you know how to solve a specific problem, you can package that knowledge into a digital format. Unlike a physical book, there are no shipping costs, no inventory, and no overhead. It is pure profit margin. Your digital assets are workers that never get tired, never complain, and never ask for a raise. The strategy of permissionless leverage. The most powerful aspect of digital real estate is that it is permissionless. You don't need a bank to approve a mortgage. You don't need a boss to give you a promotion. You simply build. You can start a newsletter today. You can launch an app tomorrow. The only barrier to entry is your own consistency and the quality of the value you provide. However, many people fail because they treat digital assets like a hobby. To make them pay you forever, you must treat them like infrastructure. This means focusing on evergreen content, topics that will be as relevant in 5 years as they are today. If you build your digital house on a temporary trend, your building will vanish when the trend dies. Imagine owning a piece of the internet that generates cash flow every time someone clicks, searches, or solves a problem. That is the reality of the digital goldmine. Wealth is what you have left when you lose all your money. Assets are what ensure you never lose it in the first place. Action. Steps for Chapter 2. Identify your niche. What problem can you solve, or what information can you provide that has a long shelf life? Choose your platform. Will you build on owned land, your own website, SaaS, or borrowed land, YouTube, social media? Always aim to migrate your audience to owned land. Build the MVP. Create a minimum viable product. Don't write a 500-page book. Write a 10-page guide. Test the market before you build the skyscraper. Digital assets are the fastest way to generate cash, but for true generational stability, we must also look at the physical world. In Chapter 3, we move from the screen to the street, physical and financial assets. Chapter 3, Physical and Financial Assets, the Pillars of Stability. While digital assets offer explosive growth and low entry costs, physical and financial assets provide the bedrock of a permanent portfolio. If digital real estate is the engine of your wealth, physical and financial assets are the chassis, the heavy, durable structure that keeps you safe during economic storms. To build a system that pays you forever, you must eventually move some of your fast digital cash into slow physical and financial vehicles. This is how you protect your gains and ensure that your lifestyle is funded by the most reliable systems humanity has ever created: the stock market and real estate. The best way to get rich is to be an owner. The best way to stay rich is to own things that are hard to destroy. The dividend snowball. Financial assets. The stock market is often viewed as a gambling den, but for the asset architect, it is a collection of productive businesses. When you buy a dividend-paying stock, you are essentially hiring the smartest CEOs and the hardest-working employees in the world to work for you. You don't have to manage them, you don't have to show up for meetings, and yet, every quarter, they send you a portion of their profits. The secret here is the dividend snowball. By reinvesting your dividends back into more shares, you create a compounding machine. Initially, the payments are small, maybe enough to buy a cup of coffee. But over time, the snowball grows. Eventually, the dividends cover your rent, then your car. Finally, they cover your entire life. This is the definition of a forever asset, because as long as humans need goods and services, productive companies will pay dividends. Physical real estate, the tangible fortress. Physical real estate remains a favorite for forever income for 3 reasons: leverage, taxes, and utility. Unlike a digital course, people will always need a physical place to sleep, eat, and work. This utility provides a floor for the asset's value. To make real estate a forever asset that doesn't become a second job, you must master the investor mindset. This means using property management companies to handle the 3 T's: tenants, toilets, and trash. If you are the one answering the phone when a pipe bursts, you are a laborer. If a manager handles it and sends you a net check, you are an owner. The goal is cash flow, not just appreciation. You want the asset to pay you today, not just in 20 years when you sell it. Real estate is the only asset that allows you to borrow someone else's money to buy a building, have a third party pay off the loan, and keep the profit for yourself. Asset-backed businesses. Beyond stocks and houses, there is the world of owner-absentee businesses. These are physical businesses, like car washes, laundromats, or storage units, that have high systemization potential. These businesses are valuable because they are backed by physical equipment or land. When you build a business that runs on a standard operating procedure, SOP, you have created a machine that generates cash without your presence. The key to forever in this category is durability. A laundromat is durable. A trendy fashion boutique is not. A storage unit facility is durable. A high-end restaurant is risky. We are looking for the boring, the necessary, and the repeatable. Boring businesses make for very exciting bank accounts. Action steps for Chapter 3. Start the snowball. Open a brokerage account and pick an index fund or a dividend king. Start small, but start now. Study. The yield. Don't look at the stock price. Look at the yield on cost. How much cash is this asset putting in your pocket relative to what you paid? Think in systems. If you buy a physical asset, immediately calculate the cost of a manager. If the deal doesn't work after paying a manager, it's not an asset. It's a job. Physical and financial assets take more capital to start, but they provide a level of security that digital assets cannot match. In Chapter 4, we will discuss the build phase, the actual process of moving from zero to your first forever asset. Chapter 4. The build phase, the hard truth about passive income. There is a lie often sold in the world of finance, the idea that passive income is easy. Let's correct that right now. Passive income is the result of massive active effort. You are not looking for a shortcut. You are looking for leverage. You are willing to work 80 hours a week now so that you never have to work again later. The build phase is the period where most people quit. It is the valley of disappointment where you are putting in the work, but the asset hasn't started paying you back yet. To survive this phase, you must transition from sweat equity to system equity. Most people overestimate what they can do in 1 year and underestimate what they can do in 10. Phase 1. The sweat equity period. In the beginning, you are the engine. If you are starting a YouTube channel, you are the writer, the editor, and the cameraman. If you are buying your first rental property, you are the one painting the walls and screening the tenants. This is the stage where you buy your freedom with your time. The goal of this phase is not just to make money. It is to learn the mechanics of the asset. You cannot automate what you do not understand. You cannot delegate a process that you haven't mastered. During the sweat equity period, your primary job is to create a manual for how the asset works. Phase 2. The reinvestment bridge. The biggest mistake people make during the build phase is eating their seed corn. When that first digital product sells or that first dividend check arrives, they spend it on a nice dinner or a new gadget. This is financial suicide. To build an asset that pays you forever, every cent of profit must be reinvested back into the asset or used to buy a new one. This is the reinvestment bridge. You live off your linear income, your day job, and let your assets grow in a vacuum. You only start spending the money when the asset's cash flow exceeds your cost of living. This is the point of no return, where your wealth becomes self-sustaining. Phase 3. Managing risk and protecting the fortress. As your assets grow, they become targets. To ensure they pay you forever, you must protect them from the three great erasers: taxes, inflation, and litigation. This is where asset architecture becomes asset defense. You move from owning things in your own name to owning them through legal structures like LLCs or trusts. You diversify your digital assets with physical ones. You ensure that no single point of failure can wipe you out. A forever asset is only forever if it is protected by a legal and strategic moat. Wealth is not about how much money you make. It's about how much money you keep and how hard that money works for you. Action steps for Chapter 4. The 5-hour rule. Commit at least 5 hours a week to building your asset, regardless of how tired you are from your main job. The profit lock. Create a separate bank account for your asset income. Do not touch it for personal expenses for the first 24 months. Document the process. Every time you perform a task for your asset, write down the steps. This is the beginning of your standard operating procedure. The build phase is a test of character. It is the price of admission to the world of the free. Once the foundation is laid, it's time to step back and let the machines take over. In Chapter 5, we look at the magic of systems and automation. Chapter 5. Systems and Automation. Removing the human element. The ultimate goal of an asset architect is to become redundant. If the asset requires your brain to make every decision and your hands to perform every movement, you haven't built an asset. You've built a highly specialized job. To make an asset pay you forever, you must disconnect the income from your personal pulse. This is achieved through the golden trio of leverage: software, systems, and people. When these three elements work in harmony, you transition from being the operator of the machine to being the owner of the factory. The best system is the one that works when you are not there. The second best is the one that tells you exactly what went wrong when you were away. The software layer. Digital automation. In the modern era, software is your first and cheapest employee. Automated workflows can handle lead generation, customer support, content distribution, and billing 24/7 without ever taking a lunch break. Tools that connect different apps, like Zapier or Make, allow you to build digital nervous systems that move data and money automatically. For example, in a digital real estate asset, software can automatically take a customer's payment, deliver the digital product, add them to an email sequence for future sales, and update your accounting software. Zero human intervention. That is the gold standard of a forever asset. The system layer. The SOP, Standard Operating Procedure. A system is simply a documented way of doing things. Even if a task cannot be done by software yet, it can be systematized so that anyone can do it. This is the secret of franchises like McDonald's. They don't hire world-class chefs, they hire teenagers and give them a world-class system. You must create a playbook for your asset. This playbook should cover every recurring task: how to upload a video, how to vet a tenant, how to respond to a common refund request. When you have a clear SOP, you remove the creative friction and turn the work into a repeatable process. Once a process is repeatable, it is delegatable. The people layer, strategic delegation. Eventually, you will hit a wall that software and checklists cannot climb. You will need human judgment. This is where you hire operators. This doesn't necessarily mean a full-time staff. In the gig economy, you can hire specialized virtual assistants or agency partners for specific roles. The key to delegation is not abdicating responsibility, but transferring it. You pay others to execute your SOPs. If your asset generates $5,000 a month and it costs $1,000 a month to pay a manager to run it entirely, you are not losing $1,000. You are buying back 100% of your time for $1,000. That is the best trade you will ever make. If you can't delegate, you can't scale. If you can't scale, you can't be free. The three-step automation audit. To audit your current assets for automation potential, ask these three questions every Sunday. Eliminate. Is this task even necessary for the asset to pay me? Often we do busy work that adds no value. Automate. Can a piece of software or an AI tool do this task instead of a human? Delegate. If it must be done by a human, am I the only person who can do it? If not, write the SOP and hire. By the time you finish this phase, your role changes. You are no longer the one pulling the levers. You are the one watching the dashboard, ensuring the machine is running smoothly and deciding where to point it next. Your goal is to be the least important person in your business. In our final section, we will wrap up with the legacy mindset and how to maintain your freedom for the long haul. Conclusion: the legacy mindset, living on your own terms. You have now traveled through the blueprint of the asset architect. We have moved from the trap of linear income to the frontier of digital real estate, through the stability of physical assets and into the freedom of automated systems. But there is one final piece to this puzzle that determines whether your wealth will be a burden or a blessing. The legacy mindset. Building assets that pay you forever is not about greed. It is about autonomy. It is about reclaiming the one resource that no amount of money can ever buy back: time. When your assets cover your expenses, you stop asking, "What pays the most?" and start asking, "What is most worth doing?" Wealth is the ability to fully experience life. It is the freedom to say no to what drains you and yes to what fulfills you. The freedom threshold. There is a specific moment in every asset architect's journey called the freedom threshold. This is the day your passive cash flow exceeds your cost of living. On that day, work becomes optional. For some, this threshold is $3,000 a month. For others, it's $30,000. Regardless of the number, the feeling is the same. The weight of the world is lifted. Once you cross this threshold, your job changes. You are no longer building for survival. You are building for legacy. You are creating systems that can provide for your family, support your community, and fund your passions long after you are gone. This is what it means to be paid forever. But remember, the forever in the title of this book is not a guarantee. It is a responsibility. The world changes. Technologies shift. To stay wealthy, you must remain a student. You must continue to audit your systems, rotate your assets, and protect your fortress. The best way to predict the future is to create it. The best way to secure your future is to own the assets that power it. Your first step. As this audiobook concludes, you are left with a choice. You can take this information and treat it as financial entertainment, or you can treat it as a directive. The difference between those who trade time for money and those who own their lives is execution. You do not need to build a skyscraper today. You do not need to launch a global SaaS company by tomorrow. You only need to start one asset. Write that first page. Buy that first share. Document that first process. Build your first engine. The path to infinite returns is paved with small, consistent actions. The snowball starts as a single flake of snow. Your task is simply to start rolling it. Your future self, the version of you that is free, unburdened, and living on their own terms, is waiting for you to begin. The blueprint is in your hands. The time is now. Go build something that lasts. This concludes our journey today. Thank you for listening. If you found value in this, please leave a like. It really helps the channel. I'd also love to hear your favorite takeaway in the comments below. Subscribe for more audiobooks, and I'll see you in the next one.